Hi there, I'm Dean Heskin, the President and CEO of Swiss American Trading. You are tuned into our podcast, The Secret War on Cash. I have with me today my co-host, Chris Agelastos, who will also be talking to us about, or with us, about the Secret War on Cash. Good morning, Chris. How are you today?
I'm doing well, thank you.
The holidays are upon us. Christmas is here. New Year's is right around the corner.
Yep.
I can't even believe how quickly this 2024 has flown by.
No.
Um, So let's talk about like last week in the stock market had one of its worst weeks, I think they said since October. So let's get into our first article here, Chris. This is
Yeah.
America's fatal flaw as the U.S. bubble gets ready to pop. This market expert is warning.
Yeah.
When it comes to markets and it comes to bubbles, bubbles are not good, and bubbles that pop are especially not good. But this bubble, according to, again to this writer here, is calling it, quote, the mother of all bubbles. And we've seen quite a few bubbles in our day over the year, quite a few bubbles, yeah, over the years. Um, this one, however, the mother of all bubbles. And I think, to me, anyways, that's not a stretch. That's something that is believable
Yep.
in so much as we've been talking about this, like how much you look at the disconnect between how well our stock market is doing, but yet you
Hmm.
look at what's happening in corporate America as far as companies uh, hiring. We just talked about how the jobs were what overstated by nearly 1 million jobs.
Right.
And it just seems like there's been this disconnect, and now we're hearing about this mother of all bubbles. So
Yeah.
tell us more about this mother of all bubbles, Chris.
Yeah. Well, it's like you said, it's not really, it's not unexpected, but I think when people are seeing the markets go up, they're so elated, and excited to see it growing, that they don't really take a step back and look at the whole big picture. And the market has grown quite a bit, and a lot of analysts have been waiting for that bubble to pop the last several years, and it hasn't. So when a bubble doesn't pop, it keeps going and growing, and it's getting bigger and bigger, and of course, eventually it will. And some of the things they're citing here, which I think would make sense to people if they're really thinking about it, is all of the debt and the money and the deficit spending that has been pumped into the economy since COVID by the U.S. government. All of those dollars had to go somewhere in the system, and a lot of them went in to prop up companies and the market. So people have been seeing great growth in the stock market because of that, and much greater than normal. And here they call them super normal profits.
Right.
But the challenge with that is people get used to it, and it can't stay. At some point, those profits have to return to normal levels, and things balance out. And so that's what we're kind of waiting for here. They point out that the government is having to dump now $2. $2. They have to basically create $2 of debt in order to generate an additional dollar of GDP. So we're spending twice as much
Wow.
as we're getting back. And obviously, you don't have to be an economics genius to, realize that you can't keep up in that pace, at least in your own household. And at some point, our country's going to have to deal with that as well. So that's what we're
So
waiting
you're basically
for.
saying they got to spend $2 to make $1.
Right. Right. And if you being a business person, right, that you're not going to stay in business very long doing that, right? You can temporarily pump extra money into the business, of course, to get it growing, but you are going to have to back off at some point and let it operate. And this has been, kind of the biggest growth period where we've seen these exaggerated values and prices in the stock market in the last 25 years. So it's, they're not saying it's going to necessarily be tomorrow. It could be 2 weeks, it could be a few more months, but it's definitely looking like we're, going to see something in the near future here.
Right. Well, let's get right into the second article. You talk about 25 years since the last bubble.
Hmm.
This one's also from Yahoo Finance. Both these articles were. The Fed is a different author, however. The Fed is the only thing standing between investors and a full-blown stock bubble, UBS says. So
Yeah.
UBS coming out saying basically the same thing. citing a lot. In fact, some of the takeaways I got from this particular article, they cite the fact that there are, what did they say, seven indicators,
Hmm.
in terms of, when we find a market bubble, uh, six of them are in play currently.
Right. Yep.
And those six, they say, quoting from the article here, include the end of a structural bull market, profits
Hmm.
that are under pressure, a loss of breadth, meaning like there's just not a lot of the investors out there like there needs to be or should be, and then that gap of 25 years,
Hmm.
from the last bubble, and then participation among retail investors that in the prevailing sentiment, excuse me, among investors that this time is different. So
Yeah.
these six factors they're in play, and
Yeah.
we're looking here. The Fed is the only thing that is standing between the investors and a full blown bubble. So it seems to
Yeah.
me like a lot of people are saying the same thing right now. And like you were talking about, Chris, the factors are there. I
Hmm.
mean, now I guess the question is when.
Yeah. Well, we're gonna see what happens over the next few months here, and what the Fed does. We have a new president. President Trump taking office here in January. A lot of times, the Fed doesn't like to make too many drastic changes during that transition period. So we definitely need to keep our eyes kind of peeled over the first quarter of this new year. But if you were to bet on the outcome of something, and 6 out of 7 of the qualifying factors have already been checked off, you're only waiting for one more. Obviously, odds are in favor of this bubble popping, and really all the Fed would have to do is lower rates by about a point, is what they're saying. So we're at around 4.25% right now. They're saying if the Fed was around 3.25, that all 7 of 7 factors would be there, and it'd be virtually inevitable that it's going to happen. So they're predicting, about a 35% chance of this happening, this bubble bursting in 2025. So maybe we can push it off till 2026, but the hard thing here is timing the market. If you're invested heavily in the market, and 6 of the 7 bubble factors are already there, and a drop could cost you 40, 50, 60% of your value. A lot of investors, if they're paying attention to this stuff, should be scratching their heads right now and wondering, maybe now is the time for me to pull back a little bit.
Right, right. Well, I mean, the couple things. There are so many people who are talking about this bubble being there that it's gaining momentum, I guess, in that capacity. Certainly, we don't hope to see the market, pop, if you will, this bubble burst. But as you talk about, even like 25 years is when the last bubble formed.
Mhm.
25 years ago, I guess it was. Um, you know, I think a concern, at least that I have, is like look at the amount of government and national debt that we've incurred since then. And
Right.
so that's the big thing. Like if and when there is any kind of disruption to our markets, especially a severe one as much as a bubble popping, the how that won't create some kind of a whipsaw is beyond me, because I think you're going to find,
Yeah.
it's like knocking over dominoes. Once that first one goes, that obviously we
Right.
don't hope for it to be
Well,
bad, but by the same token, it has all the makings of something that could turn out to be really bad. So, all right, Chris,
yeah.
for those tuning in who might want to get some information about what's going on with the secret war on cash or what's going on in the metals market, what can they do?
Visit our website, swissamerica.com, or you can call or text us at 1-800-289-2646. That's 1-800 buy coin if you still have a phone with buttons and letters on it. But you also just go to the website, fill out a form, submit your request. There's a spot where you can enter how you heard about us, or anything that intrigues you, something you want to learn more about, and we'll tailor the information that we send to you to your concerns. So you're not going to end up on some weird list. Don't worry. Just give us a call. We're here to educate you, give you some information, and help those that are looking for some guidance.
Perfect. Well, with all those fine things that you're able to offer people for no charge, Chris, you're like You're like
Yeah,
in the holiday giving season,
that's right.
just
Tis the season.
here to brighten everyone's day. So, for those of you tuning in, thank you so much. Have a very happy holiday season, and we hope if you're not actually subscribed to this podcast, we hope you do so. And if there is, social media too. If you're not following us on social media, please do that as well. In the meantime, have a great rest of your day, great rest of your week, and we'll talk to you real soon.